a contraction, a possible contraction of 7%. That would be the worst since independence in 1965. Is this a reflection of the external environment or domestic picture that the easing of those restrictions will be really gradual and slow?
Well, I think it's a bit of a double whammy because we have the circuit breaker period where essentially most of the Singapore economic activities were basically put into cold storage for 2 months. But on top of that, we also did see a lot of lockdowns in the rest of the world. So it's both a demand shock and also a global supply chain disruption story. So net, all of it adds up to a fairly dire second quarter growth momentum. We're actually looking for second quarter to contract by double digits, possibly as bad as -15 to -20% year on year. And I think in terms of the recovery trajectory for the second half, because the reopening from 2nd June is going to be phased, and looking at how the phase 1 and phase 2 and phase 3 is going to, stretch from weeks into months, actually we probably won't see, business as usual anytime soon. So I think we really don't think that the growth momentum will return to positive territory until the fourth quarter of this year.
Are there further downside risks, given that it is such an open economy and now we have that those tensions within the US-China ratcheting up yet again?
Well, I think the macroeconomic data is going to remain quite grim in the short term. What we have seen over April and for the start of May is that actually global risk sentiment had picked up, mainly because of the improvement in the funding conditions and because of a lot of the aggressive monetary and fiscal policy easing that was coming on stream globally. But I think, yes, US-China tensions look like the noise levels will continue to ratchet up. The war words may probably stretch all the way up to the November US presidential election. So this is going to be one additional shadow on the horizon. I think if it, contributes to deferred stabilization in terms of China's growth momentum, that's going to be not a positive story for regional growth in general. So I think Singapore, as a small open economy, will be vulnerable to some of these external headwinds as well.
And this is a question that we ask many economists as well, Selena, is about whether if the consumption side is going to be slow going to recover, can we still expect the supply side of the economy to really drive this recovery before we see household spending pick up?
Well, I think it's quite clear even from the first quarter growth numbers. Manufacturing managed to eke out a positive growth, but construction and services were actually negative. I think the demand slump is actually going to be here for a slightly longer time, mainly because I think if you look in terms of the, bankruptcies and the business cessation numbers and the expected weakening in terms of the domestic labor market, domestic consumption will not be in a rush to come back. And I think if you look in terms of the deferred reopening of a lot of the F&B and the retail sectors, this also means that there's going to be a further dampener for the private consumption activities for at least a few more months. So I do think that, it would really have to be the government support scheme coming to the rescue again. But that said, overall growth momentum should remain fairly tepid in the near term. If we look at the example of China, for instance, they were first in, first out of the whole COVID crisis. Consumption remains fairly weak, although we have seen that the industrial production and economic activities came back fairly in a V-shaped kind of a trajectory. So I think it's going to be the same story for Singapore and a lot of the regional economies.
The Deputy Prime Minister is set to announce a fourth stimulus package. Is this going to be a similar one that still focuses on jobs and SMEs, or are there other things that could be different this time around?
Well, I think in this morning's GDP release, there was quite a bit of a focus given to the expected softening in the domestic labor market. So I think in that sense, the priorities will still be very much focused on creating new jobs and traineeships. I think this will basically provide some support, or at least put a floor to the expected weakening or the fallout in terms of the unemployment rate. That said, I think there have been hints that they will also provide supplementary funding for the social services sector, and this is quite encouraging because I think in terms of this whole COVID crisis, you're not talking about just the economic effects on the Singapore economy, but also the non-economic effects on the population at large as well. What is also clear is that fiscal policy would do the heavy lifting, whereas MAS monetary policy looks like basically we're on hold until the October review, and there'll be no inter-meeting reviews.
Selena, prosper thy neighbor. Singapore may have a lot of room for fiscal deficit, but maybe not so for its neighbors like Indonesia. How do you expect recovery from the rest of Southeast Asia to look like?
Well, I think the recovery story is going to be quite muted for some of the other regional economies. For Indonesia's case, I mean, we're still watching, for example, in terms of the COVID-19 infections, for it to peak and to stabilize from there. I think given that a lot of the travel restrictions there and policy came on a little bit slow, probably the sense is that infection levels have not peaked there. And although they have, increased more than doubled their fiscal deficit to above 6% of GDP this year, but I think, it may help to basically put a floor to some of the growth downside for this year. But going out into 2021, I think, there will be all the market questions coming back as to how are they going to finance this. So I think at the end of the day, for a lot of the economies reopening after the COVID lockdowns, it's not just a question of the domestic reopening, but also where is the rest of the world, the global demand conditions, and also in terms of whether we see a second or third wave of infections coming back, further restrictions coming back. So there is still a fair bit of uncertainty on the horizon. And I think for regional economies, they basically would have to take the cue from what happens in China, especially on the US-China front, and so global demand conditions.
So fair to assume that the central banks in Indonesia, in Malaysia, and Thailand will be cutting rates further?
Well, we've already seen a 50 basis point cut in Malaysia for BNM. And for BI, I think last week when they chose not to cut rates, I think they did emphasize that they would still like to look for room to actually ease monetary policy, but that's really subject to the IDR stability. I think there is a sense globally and also regionally that, in terms of the monetary policy room, could actually be fairly limited in the near term. So if overall risk sentiments fall and the dollar Asian currencies remain stable, then they do have some room to cut a little bit further. For Malaysia, for instance, I think that if growth does not pick up after the MCO is lifted on the 9th of June, then possibly they may cut down to 1.5%. And similarly, BI, probably they have another 25 to 50 basis points to go. But I think that's about it for this year.